Hello everyone, I'm Bob Bruce and welcome to the Integrity Wealth Consulting Educational Economic Update for June 2017. In this month's video, we'll talk about some of the major headlines that influenced the markets in May and what they might mean for you as an investor. Now please stay tuned at the end of this video for our required disclosure statement. Well, the economy sped up a bit this spring. In April, consumer spending rose 0.4%. That's its biggest gain since December. Spending was aided by rising income and tax refunds. Lower inflation reflected in decreasing oil prices also gave households a little bit of extra money to spend. Even with a curb in inflation, the Federal Reserve is sending a strong signal that it will raise interest rates in June and soon begin shedding some of its $4.5 trillion in bond holdings. Economic experts give little indication that the U.S. economy is going to reach a 3% growth this year, with health care and tax reform still stymied in the U.S. Congress. However, there are expected surges still looked for in infrastructure spending. Now, according to the Fed's recently released Beige Book, a summary of economic conditions in the United States by the Federal Reserve, it showed falling prices for certain final goods, including groceries, apparel, and autos. Now, job creation surged in May due to a jump in construction positions and a boom in professional and business services. Private payrolls increased by 253,000 ahead of expectations. Economists expect the report to show that private payrolls grew by 185,000 in May from 174,000 in April. Experts predict the unemployment rate, now at 4.4%, could drop to 4%. Even with all this uncertainty, the Dow, S&P 500, and NASDAQ were all on track to post monthly gains and new highs. Tech-heavy NASDAQ gained 2.5% in May and posted a 7-month winning streak, its longest streak since 2013. The Dow, S&P 500, and NASDAQ closed lower on May 31st after financials dropped 0.8%. Treasury yields fell steeply compared to where they began trading in 2017. On May 31st, the benchmark 10-year yield hung near 2.19%. It started the year at 2.5%. The Chicago Board Options Exchange Volatility Index, or the VIX, you probably heard it stated that way, which is widely considered the best gauge of fear in the market, traded near 10.4. That is near a 10-year low. The Commerce Department said the durable good orders fell 0.7% in April, after rising 2.3% in March. That was the first downturn since durable goods orders fell 4.6% back in November. Orders for transportation equipment fell 1.2% and pulled down by a 9.2% drop in orders for civilian aircraft. Now, the Consumer Confidence Index, which previously decreased in April, fell again in May, but U.S. consumers are still very optimistic overall. The index now stands at 117.9, mostly in line with what economists expected for May. The Consumer Confidence Index last fell to 120.3 in April after hitting 125.6 in March, its highest level since December of 2000. Economists closely watch the mood of consumers because their spending makes up about 70% of our economy. Now, in the coming month, we will be watching the second quarter very closely for you. Though economists are all over the place regarding about how much it will improve, the overall outlook is expected to improve gradually. We will also keep close watch on how the decision to pull out of the Paris Accord on climate change may affect trade in other countries. If you want more guidance on your financial needs or balancing your assets and liabilities in this current environment, we're always here to talk for you. You can always call us at 724-940-9060. That's it for this month's Economic Update. Once again, this is Bob Bruce from Integrity Wealth Consulting.